Hello, friends. Welcome to this another special episode from Weekend Investing, where we analyze data and based on that data, we try to derive some insights. So today's video is yet another video on gold. I am not going to leave you till you allocate some money to gold, and that has been the driving force for all this education. So our thumb rule that has been sort of well accepted by a lot of folks is age divided by 2 as percentage of net worth. So if you are, let's say, 50 years old, allocation to gold at 25% is not such a bad thing. But of course, do check with your financial advisor because he knows the in-depths of your situation, your goals, etc. But in general, without making it an advisory, I can say this rule works very well. So as you age, your percentage allocation to gold continues to go up from, let's say, 10-15% in your younger age towards 60 40-50% as you get very old, and that brings a lot of stability to your portfolio as you're growing older. Possibly you don't want that much volatility, of course. Who don't want any stability and want to go with 100% equity, that is fine as well. uh, there is no one rule that will fit everybody. So with this in the background, a lot of folks continue to ask what should be the route for buying gold, whether physical, whether ETF, whether mutual fund, whether digital. So we will compare all of these in this video, and hopefully by the end of the video, you would have chosen what is best for you. So there is no one solution that fits everybody. There will be folks who may like one option versus the other, and there may be others who may like the others versus this one. So there is no one answer, but all the characteristics, the pluses and minuses of each of these, I will try to go over. Do let me know if I have, uh, made any mistakes in my assessment. Uh, this is all market derived information that I have, and from whatever I understand. So what we will discuss in this video is all four formats of gold: who offers it, how convenient is it, what is the minimum investment required, how is the liquidity in that particular space, what are the costs, is conversion to physical metal possible, what are the regulations, and what is the taxation. So we will discuss everything about the different formats of having gold allocation, and you can choose and pick which of those suit you. So who offers it? So digital gold is offered primarily by three companies: Augment Gold Tech, MMTC PAMP, and Digital India Safe Gold. They offer digital gold with authorized partners. So there are many fintech platforms and jewelers who are their sort of authorized resellers. So for Paytm is an authorized reseller for, I think, MMTC PAMP. So when you buy digital gold on Paytm, it's actually coming from MMTC PAMP. So that's how it is offered. Gold ETF is offered by different asset management companies, uh, and they are currently about 17 in number. So there are 17 gold ETFs available. Physical gold, of course, is offered by jewelers. It is offered by banks and other authorized dealers. Uh, Again, like MMTC PAMP, can be bought in form of coins, bars, or jewelry. And gold mutual funds are again managed by AMCs, and they invest in gold or gold-related assets like gold ETFs. In terms of convenience, digital gold can be purchased online, mostly through the mobile and through the authorized partners. So the convenience is very, very smooth. There is absolutely uh, no, you can say, resistance in terms of buying or selling of gold. Gold ETFs are listed on the stock exchange. So ETF is exchange traded fund, for those of you who don't know it. So this is a fund which is listed on the exchange. So you can buy and sell this fund on the exchange at the current price. And the gold ETF the AMC which is backing the ETF is going to provide a two-way quote. So they do market making, they do a buy and sell quote at very low impact cost. So if I'm talking about, let's say, Nippon Gold Bees, then there's a quote available at 62.5 is the buyer and 62.51 is the seller. So there is no sort of slippage between buy and sell on that. But for buying gold ETF through the exchange, obviously you need a trading account, and for that a demat account is obviously also needed. Physical gold will require a likely visit to the jeweler or a bank, although you can also buy it on Amazon and directly on sites which provide physical gold from reputed sources. You can get that. There is no issue in that. And gold mutual funds can be bought online or offline through AMC partners, distributors, or brokers. So gold mutual funds are nothing but regular kind of mutual funds, and we will see what are the pluses and minuses of that. Minimum investment, digital gold is sort of positioned to be used by very small new entrants into the gold space. So you will have, even you can buy 10 rupees worth of gold there. That is the sort of intent, that new users be able to wet their feet. Gold ETF is based on the NAV. So, for instance, just as the question, the ETF I mentioned, Nippon Gold Bees trades at around 65 rupees per unit. The Zerodha gold case is trading at about 12 rupees per unit. So, depending upon the type of ETF you're choosing, that becomes the minimum investment. So you could choose to, invest 65 rupees at one unit in one of them, or 12 rupees that way. Physical gold can also be bought in smaller quantities, although the absolute minimum becomes a little bigger than the previous two options. So, for instance, you could go and buy a half a gram coin of gold that may cost you maybe 4 or 5 thousand rupees, or some small jewelry that may have maybe even lesser gold. So you can buy physical gold even at very low levels. Gold mutual funds will have the minimum SIP of 500 or a larger lump sum depending upon the AMC. So this is how the minimum investments work in the gold space. In terms of liquidity, these are of course not traded but can be sold at the prevailing gold price. So typically, a digital gold provider will offer two-way quotes, and the two-way quotes will have some, maybe a percent or two gap between the buy and the sell, and it is always available, possibly even 24 by 7. So you can always go and sell back your gold to the same platform, because the platform is actually not going to deliver you the gold. When you buy digital gold, supposedly that has been allocated to you, and it's like a ledger that is kept with the provider, that as and when you want to sell, you can come and sell it. Gold ETF is, as I said, actively traded on the exchange. Sometimes the newer ETFs can have low trading volume. So the established ones, which have large AUMs and which offer very active market making, can be the only liquid ones. So you should be very careful in buying or selling of gold ETFs at market price. So sometimes a lot of folks who may not be aware may just send a buy order from their mobile phone. I want to buy 20 lakh rupees worth of gold ETF. It may cause some slippages, because a lot of gold ETFs may not be as liquid at the bid ask spread. So be careful with that. Always use limit orders. Always track where the gold ETF price is today versus yesterday, and how much has gold moved in spot market today. Try to correlate some of that and find a good price to buy or sell. Physical gold can also be sold at any time, but usually what happens is, unless you have a uh, arrangement from where you bought the gold to buy it back, other buyers may be very susceptible. Other buyers may not want your gold unless it is marked uh, by their brand. So, for instance, if you're buying gold from jeweler A, jeweler B may be very, cagey about trying to buy gold from you. So it is always best to sell to the same buyer, same vendor. There are uh, institutions like MMTC PAMP who have opened gold buyback centers, where they will melt the gold in front of you and determine the percentage of gold in it, and based on the current repurchase price, they will give you the price and deliver it in your bank. So all that is overboard in terms of all check payments, and it is a proper ID based purchase and sale. uh, Gold mutual funds can also be sold at any point of time. The redemption, however, may take 1 to 3 days, and you may not be able to get the current price. So you will get, the NAV of the previous day, or if to a certain cutoff time, uh, if you go for the same day of sells. The same issue that happens in equity mutual funds when the market is booming today and you want to buy the units today. Only until a certain point in the day, if you send your money in, are you able to get that NAV. Uh, you cannot obviously get the current NAV in any of the mutual funds. In terms of costs, so the purchase of digital gold attracts 3% GST, and obviously because the provider is offering you this service, they will charge you for storage, insurance, trustee fee, etc. So there may be separate charges for this, and if in case it is convertible to gold, there may be separate charges for that also. Gold ETFs have a recurring expense ratio of about 0.06 to 1%, depending upon the ETF provider. And it is directly deducted from the NAV, so you never sort of come to know about it. And the broker through which you will do the purchase or sale may also have a transaction cost if it is not a zero brokerage broker, and that may be 0.5% to 1% also for the full service brokers in the market. So be very careful, because in gold you don't want to give up few percentage points just in buying and selling. Physical gold, if you're buying jewelry, it will incur some making charges. Even for the gold bars, there are some making charges, but those are very less. But in jewelry, it could be 10, 15, 20%. And when you go back to sell that, of course, you are not getting the making charges. You will only get the value of the gold. The physical security risk of holding the gold, of course, has some costs. You may have to buy a bank locker, or you may have keep it in some vault. There will be a storage cost, and of course, GST on the purchase is also applicable. Gold mutual funds expense ratio is again 0.06% to 1%. Uh, there is no making or storage costs, and these expenses are deducted from the NAV directly. In terms of conversion of digital gold to physical gold, so you can convert it directly to physical gold. It can also be swapped for jewelry depending upon the authorized partner. Usually this happens beyond a certain threshold. So, if you have like, maybe like 50 grams, 20 grams, 30 grams, only then that conversion really would make sense. If it is a very small amount, there would possibly be no conversion. Gold ETFs also can be converted to physical gold if they hold certain size. So, for instance, I know the largest uh, ETF in the market requires equivalent of 1 kg of gold to be there in your gold ETF purchase account, and then you can approach the AMC to convert it into physical gold, and there is a process to it, and some costs are also there. So it's not an easy conversion, but it is because of the nature of the instrument, they have to provide this service if a gold uh, buyer wants to rematerialize their ETF units. Physical gold, of course, is already in physical form. It can be exchanged for other products like jewelry, etc. Gold mutual funds don't offer any conversion facility. Proceeds can be received in your bank, and you can use them to buy ETFs or physical gold, or whichever way. In terms of regulation, digital gold is not under purview of any particular regulatory body. So this is the biggest risk for digital gold, that nobody really is regulating that space. Gold ETFs, because they are part of AMCs, they are under the direct supervision of SEBI. Physical gold, again, there is no formal regulatory body, but there is hallmarking standards for purity. So, unless it is hallmark gold, it essentially is illegal to buy or sell that gold. Gold mutual funds are again regulated by SEBI and managed by professional fund managers, so the regulation is good there. In terms of taxation, now there are different taxation strategies or outcomes for different investment types. So if you have digital gold and your period of holding is less than 24 months, you will be taxed as per your income tax slab. This is the same as physical gold. If it is less than 24 months, you are taxed as your income slab. Same as gold mutual fund, less than 24 months, taxed as your income slab. The only difference is in gold ETFs, where if it is less than 12 months, then it is taxed as per your income slab. Otherwise, it goes into long-term capital gain. What is the long-term capital gain? So for gold ETF, more than 12 months, it becomes 12.5% plus cess, etc. And for all the other three categories, it is not 12 months, but it is 24 months of long-term capital gains. So digital gold, physical gold, gold mutual fund, you need to hold for 2 years minimum to get the long-term capital gains tax rate. Uh, the pros and cons of each format. So let's go through quickly on pros and cons. So digital gold can be purchased online with ease. There's low minimum investment, offers the option to convert with physical gold, can be purchased 24/7, purchased or sold. Cons is that it is not regulated by any formal authority. So if you're buying gold, digital gold, you don't know if an equivalent amount is being kept in the vault, allocated to you. Charges for storage and insurance will be charged to you. Of course, 3% GST will also be there, and it may be difficult to trade actively due to an exchange listing. So it all depends upon the whims of the provider, what kind of spread they would like to have between the buy and sell. Gold ETFs are actively traded on the exchange, so there's good liquidity, high liquidity. It is regulated by SEBI. It is transparent prices, and over the last since 2008, I think I've been tracking last 15, 16 years. There is hardly any tracking error in terms of the returns on gold versus returns on gold ETFs, and can be bought and sold easily via your demat account. The con is that if you don't have a demat account, you will be required to have a demat account, so it adds a layers of complexity to somebody who doesn't have one. The expense ratio is there, which can eat into your returns, and you cannot convert it directly into physical gold unless you have a large quantum of it. The pros of physical gold is that it is tangible and trusted for ages, a store of value. It can be bought in various forms: coins, bar, jewelry, easily convertible to cash or other gold products, no expense ratio as with digital investments. And as they say, gold is that asset which should not have any counterparty risk. So the gold is that only asset which does not have any counterparty risk. And physical gold, if it is in your hand, has no counterparty risk. All other formats, whether ETF, mutual fund, digital, and SGBs, anything you will have uh, uh, a counterparty risk. The cons is that higher costs due to making charges can be there. It is prone, of course, to theft or physical damage. Selling may involve discounts at the current price, and there is no regulatory oversight beyond the purity standards. Gold mutual funds, professionally managed by AMCs, easy to invest via SIP or lump sums, regulated by SEBI. These are the pros. Expense ratios are there, 0.5 to 1%. You cannot convert it into physical gold, and redemption can take time. You may not get that exact spot rate at the time of your buy or sell which you actually wanted. So this is available there. Beyond this, existing series of SGBs are available. You can do calculations basis the spot price, the interest rates, and the interest on those SGBs, whether they are fairly valued at the current price or not. Most of them are overpriced now. They do have an advantage of a tax-free status at the end of the maturity. So consider all that in case you want to go for the SGBs, but most of it, I think, the volumes are shifting back towards ETFs, mutual funds, physical gold, because there is no net new issuance of SGBs, which are also quite illiquid in the market. So double check all facts, consult an financial advisor before zeroing in on this, and choose the right format. Or you can even have combination of these. So you may have some physical, some ETFs, or some other variation as you like it, and have a great allocation within your portfolio to gold, which will really help you as you go along in your investing journey. Thank you so much, and I'll see you in the next one. Bye.